The Federal Reserve is releasing its latest minutes for its policymaking meeting. I have here with me today Jeffrey Sica of Sica Wealth Management. Jeff, thanks so much for being in.
Thanks for having me, Joe.
Jeff, we're going to throw it off over to Dave Peltier in the newsroom. Dave, what are you seeing on the headlines so far?
Sure, Joe, thank you. The top headline here today is that the Fed says inflation persistently below 2% goal could pose a risk. Also seeing some headlines that the Fed is anticipating inflation back to 2% target in the medium term. I think it's also important to note that just a few minutes before this news did hit at 2 o'clock p.m. Eastern time, that there are reports coming out of the Financial Times that President Obama is considering Don Cohn as a possible replacement for Ben Bernanke.
Interesting. So as we have Fed minutes come out, we have the Financial Times breaking some news that they think that there is yet another person in the horse race. Let's first jump to the 2% inflation point. That is part of the dual mandate of the Federal Reserve, saying we don't want deflation, but we don't want rampant inflation. We've had this discussion before. They've mentioned it again. What do you think of it?
Well, the 2%, that's the crucial number. First of all, the first Fed in history that's ever given this inflation mandate, and that's given the investors the enthusiasm to buy into the market, anticipating more and more printing. I think we're very far from that. I think we're getting to the point where we're going to have some level of consistency going forward, but whether or not we meet those expectations remains to be seen.
What do you make of, we'll quickly turn back to, the whole discussion has been Yellen versus Summers, and now we have maybe another candidate in the running. Should we be paying attention to those type of headlines right now?
Well, I think to the point, you have to it's really looking at the similarities between Summers and Yellen and Bernanke. It's whether or not there's going to be somebody that's going to come with a different philosophy. My opinion is there's very little chance we'll have anything except an extreme dove, and that's going to be pretty much across the board sentiment from just about anybody. I don't think they're going to bring anybody in there that's going to be more hawkish than what we have.
Yeah, that'll be interesting to look out for. Jeff, we're going to throw it back to Dave. Dave, is there anything else you've seen on the wire about these minutes that should be sticking out to investors in the markets?
Sure, Joe. A couple more headlines here. Fed saying that downside risks have diminished since the fall, and also talking about the overall economy. Another big one is that the Fed sees economic growth will pick up from the recent pace we've seen. I just was going through the actual statement itself, and I just noticed at the end that there was one person voting against the action, Esther George, who was concerned that the continued high level of monetary accommodation increased the risk of future economic and financial imbalances.
So there you go. We have Esther George coming out saying, I'm not voting for this action. We have in the past talked about Fed members kind of having some differing points of view as we get closer to this September moment. What do you make of it?
Well, there's going to be some different points of view, but I think most people accept that Bernanke is the man. He is the puppet master there. He is the one that's going to call the shots. So as much as we may have some dissension, we may even have more dissension month over month than we've seen in quite a while. I anticipate that no one's going to focus on anything but what the chairman says.
Sure.
And that's going to be the guiding force.
So Jeff, my question and so many other people's question is, when does the Fed begin to taper? ADP numbers came out this morning better than expected. A lot of economists are saying that the ADP numbers have been tracking closer to non-farm payrolls this year than they did in previous years. Does this suggest that as the labor market is improving, that we're going to get some sort of tapering very, very soon?
Well, it's interesting you bring up the ADP numbers, because also the GDP numbers. Now they're starting to see, the biggest problem we have with numbers is we're seeing the numbers on face value, they look better, but when you look under the surface, there's some structural weakness that needs to be addressed.
Like what?
Well, in terms of the types of jobs we're creating a lot of part-time jobs. We're creating part-time jobs, plus the savings rates are down. Plus what Bernanke brought up himself, which was the amount of people that are actually leaving the workforce. So as much as you could be enthusiastic that 200,000 number today was reached, you also have to look at the things that the chairman had brought up in terms of the systemic weakness in the employment number. Plus, when it comes to things like GDP, now we get this number today and everybody is celebrating it as this better number. And you have a revision from last month's number. So the anticipation is, as much as this number seemed to be better, we'll probably get a revision back to the 1%. And that has to be in the forefront of the chairman's mind, being that he considers printing money to be the solution to all of our economic problems, that there's systemic weakness across the board.
We're going to jump back over to Dave. Dave, what's going on?
Sure. Well, a couple things here. Just no surprise in the fact that the Fed's going to keep buying back treasuries at $45 billion a month, and also $85 billion pace of bond buying. I'm taking a look at the market in general. Stocks, the broader U.S. stock market averages are up a little bit since this news came out, but we're well off the highs. We've been selling off into this, but we have seen a little lift since the statement has come out.
Interesting. So what do you make of that, Jeff?
Well, I think it's pretty much status quo for what people believed. I think they're really looking for the verbiage, and they're looking, and right now it's going to go past this statement to the employment number on Friday to see if there's any follow through with what we've seen. But this is not surprising at all. They want to see if there's a reiteration of the inflation number, if there's a reiteration of the jobs target, and if he says that, remember he at one point said that the Fed is willing to do more or less to stimulate the economy. Now, saying more or less is about as transparent as nothing else he could have possibly said. So we're just willing to do whatever we have to do, and investors have to assume that that's going to be the answer.
So then what it sounds like is you think that the jobs number, the non-farm payrolls that come out on Friday about July, might be the bigger news story this week for stocks.
Yeah, they absolutely might be, because we're seeing the surface numbers, we're seeing the underlying numbers, and looking at whether or not this jobs number is going to be a follow through on this ADP number, and whether or not it's reflecting this improvement in GDP. And if they take that into account, this could be nearing them closer to tapering. I don't necessarily from some of the last statements Bernanke said that he's willing to taper based on the systemic weakness he sees in the employment situation.
All right, Jeff. Dave, we'd like to thank you and the newsroom for everything. I'd like to thank Jeff Sica for being in with us. For The Street, I'm Joe Deaux.